Good morning, it's Harvey Jackson. A couple of news items that's supporting this canola slash soybean oil market. Biofuel blending quotas helped that, and the NOPA came out with some crush numbers, and there's some suggestions that there might be lower soybean yield in there as well from normal, or it could even mean that the yield of the bean might have been a little bit lower than expected as well, because it's driving up the oil price and the meal price is not climbing. But you can speculate there as well. So Washington is getting ready to lock in the 2026 blending requirements. You can see that the total biofuels proposed was 24 billion gallons in 2026 versus the 22.3 in 2025. But now they're weighing in, and bio-based diesel originally was at 5.61 billion gallons, but now sounds like it's going to be between 5.2 and 5.6. There's some of the clarity is actually getting gained from not penalizing foreign oil, but it's also just putting some stability in the market as it has a number where the number is ultra low. It wasn't matching with the build that they had for the whole renewable fuel space and the crush. So now that they've got a number that's closer to what the industry can produce. So here's your NOPA numbers. You can see that the monthly crush keeps on tracking very high compared to the last few years, and that's expected with the number of crushers that came online. But you also have the oil stocks starting to climb here, and you've got more crushers and oil stocks still relatively high, but it's not that high considering that there's more crushers, right? So you can have that as a play out there as well. Another point out here is oil share of the crush value percent by week. So you can see that it's closer to the 40% versus the 30%, in prior years as the oil share value of the crush. So as this keeps going up and the meal kind of stays steady, you're actually moving that oil value up. The consumer price index came out yesterday as well, and it did point at food prices actually going quite a bit higher. So I think the clown Joe Carney is probably going to have some more pressure on this affordability crisis. He might take credit for the fuel prices coming down, but I think we can give Trump credit there as well. He's been one of his main mandates is to keep the fuel prices lower, and yeah, we're benefiting even though we've got hidden taxes on fuel compared to the U.S. Let's a quick look at the weather. You can see that the storm is still hanging out here. It's dumping snow as we speak. Only a few inches here that's sitting here, but we'll expect the winds to pick up and make it a little bit miserable. As you can see these pockets of high wind areas. Here's just your active weather as it passes through. You can see, as soon as we get tomorrow, and most of that is gone, but the winds might be stopping us from maybe getting a little bit more done there. Canola actually hitting and getting above some of these values where we have to reevaluate. We're at 680 on the March and or on the May, and yeah, we have to reevaluate what positions we have there. Rapeseed is at 425 higher, so 493. Soybean oil up a whole penny, and it's at 58 cents. Palm oil down at 4,013 ringgit. Crude oil is up $1.67, so it's $64 barrel. Soybeans up 6 3/4 at 11.40. Spring wheat 570, up a couple pennies, but you can see your hard red winter and your Chicago, we're up 8 and 6 respectively. And your corn is up a penny, and your Canadian dollar is down slightly as well. So here's the chart. We did peak above this 200-day moving average, and that's the signal to reevaluate whether, the guys that are selling, we should be maybe going long and buying some calls, or just going long. Here's just a longer timeline. So we're going into 5 years on the front month, and you can see that where we were, where we are right now. So, the last 5 years we've actually had this whole decline. Maybe we'll get back there. So have a look at the November contract, and that's breaking out above these values here. So that's a great sign to see there as well. We're getting back to some of these values. And here's your European rapeseed, and your soybean oil broke above these values that were made in June, July. Soybean futures, we're trying to eclipse that same value that we were back in November. But when you look farther back, the same kind of scenario that we saw with canola, where we had some high values back in 22 and 23, and now declining. So if we can break above these values, that's a good sign. We can maybe look for values in that $12 mark if that were to continue. And here we are with palm oil getting cheaper. So there's a whole problem with the scenario. You got palm oil getting cheaper, the canola that we need some export market is getting more and more expensive. So if we're counting on China, it's going to be a hope and a dream, I think. Crude palm oil, yeah, just longer term. These are the values that we saw back in 2022, but even 25, we were up in the 5,200 ringgit value. The Canadian dollar still pulling off some of those highs that we were at. And if you look 5 year back, you can see that we were in that 76 area, which is probably a safe place where we would like to be. But with our economy the way it's going, I'm thinking we're going to be in the lower end here at some point here. U.S. dollar index, it's on the decline for the last 5 years, but you can see that this is kind of where Trump wants it as well. Quick look at wheat. Spring wheat, we're still in the bottom end of that channel. We're not really breaking out, but you can see that Kansas is actually breaking out above the 200-day. And so you get above the 200-day, that's a bullish move. And Chicago, we're trying to get there, but we're not above it yet. And nowhere close really on the European wheat either. Corn futures not having the same response to this whole EPA than the corn or as oil. And that's all you have for you.